Just a disclaimer, Charmaine was the second youngest founder that I ever founded. She was 21 years old. I still remember seeing her when we first put the first check, right? She had 10 folks working for her for free. I was like, so I said, we don't know what you want to do, but we want to back you because she was, she is still very dynamic. When she was like, what, 21, right? So anyway, my name is Julian. Thank you all for attending NEX Asia. It's a real honor for everyone, for those who stayed. So, and I hope, during this whole conference itself, you actually managed to take home many lessons that you could use in practice, to use in real life. So, if you will indulge me today, I would just like to share a little bit about my fund. So, disclaimer: we are. This is under for MAS requirements because we are a VCFM registered entity.
Hey, thank you so much for sending us this opportunity back in October of 2022. We finally had the chance to review your deck, and unfortunately, we'll have to hold off. I know we're a pre-seed fund, but you're a little bit too early for us, and we typically invest in founding teams that have 2 or more founders, usually Stanford graduates or dropouts, and we think it's more of a feature rather than a product, and doesn't fit into our investment scope of investing into unicornification as a service firms, right? So come back to us when you get more traction. We wish you all the best, and we'll be cheering for you from the sidelines, all right? Best. Talker from Hypergrowth Capital. End. All right, send the email.
So, I know this is satire, right? Are there any VC funds here? Okay, no. Okay, great. So I know this is satire, but it happens more often than not, right? So when I was working in venture capital, you meet a lot of associates, partners, right? This is pretty much how they deal with rejections, or they deal with the companies themselves. There's a lot of pride in the ecosystem, and that kind of lead to this. The last couple of years, the last 2 years especially, hasn't been great for venture capital. There's been a whole slew of scandals, founders, losing a lot of money for the investors, VC funds themselves also, So the question begs, why should, anyone invest in a VC fund or invest in startups per se, right? For example, eFishery, for those who are not in the know, eFishery was like an agriculture startup. The agriculture startup actually was based out of Indonesia, and they forged their numbers, and because of that, a lot of the investors pulled out. And then on the other hand, you have Tiny Hub, which is also another agriculture startup. And they also there was a lot of kickbacks that was involved. And so, the question begs, why? Why? What happened to our venture ecosystem? The question is pretty simple. The answer is pretty simple. There's a lot of hubris in the ecosystems, too much easy capital over the last 10 years, and that led to a lot of shenanigans, as we say. And the other one, I think, which is the more fundamental thing, and this is something that our fund is actually very against is, there's a lot of investor market fit, right? So what I mean by investor market fit, so usually a startup comes, to Southeast Asia, or they say, okay, we're going to do the Southeast Asian market. Indonesia is a great market. We are going to fund you. We're going to basically try to acquire customers at a unsustainable pace, right? And at the end of the day, when all the credits stop, when all the discounts stop, they start losing their customers. So it's not a sustainable growth model, right? And at almost every board meeting, when I was working as a VC, there was a lot always asking, why is your numbers not great? Why is it, so they were always asking, buy more ads, use Facebook ads, use TikTok ads, right, to drive growth. And that is a very unsustainable model. So is the Southeast Asian tech ecosystem dead? No, it's not by a long shot, right? So we may be down, but we're still holding at about $7.7 billion. And the bright spot is that just this year, early this year, for H1, 32% of all investments are actually AI driven, right? And Singapore sits in a very nice spot right now between China and US while they are having their trade wars. So, we are a safe harbor, we have great talent, we have enough GPUs, right? We have also a very, very diverse workforce, who are multilingual, who can actually both speak Asian languages as well as English. And, we can actually conquer the world from Singapore, right? And so many Chinese companies actually do fly to Singapore. So currently in China, hopefully we have more, right? Companies like Manus, companies like Sapient AI, which is actually building its own, almost like a DeepSeek-like model with their own HRM architecture. And we have Wiz, which I personally invested in. And I went in at the seed stage, and when I was there, I actually did help them grow their sales locally. And if you look at most of the top open source models today, by the way, this screenshot was taken about a day ago, and 16 out of the 20 top training models are actually Quen or basically Chinese based. And as I'm sure you guys have seen over the last 2 days, agentic automation, will change everything, right? We've moved past LLMs. We're now looking at multiple LLMs, working in orchestration with each other. We're optimizing the way we orchestrate them, and we are making them smarter, better, and faster. Right, so we have companies like Genspark, companies like Wiz AI, companies like Cresta, changing the way we work. So, and then of course, like one of the great, I would say, advantages for us is that because of our cost structure, we are able to be much better. I would say cheaper, but I would say more cost effective in terms of how we hire engineers. And from our fund perspective also, because in a sense, when I first started out, I wasn't always a VC. I started out as a startup founder. And as you can tell, we don't really take ourselves seriously. These are all my co-founders. We didn't even have an office. We were renting a small 3-bedroom apartment, right? And this is really how this is way before even Zoom. So we actually did our Skype meetings with just our shirts, right? But we were wearing shorts underneath, right? And then, and so we built, I would say, it was a Singapore-based, but we built a live chat software company out of Singapore. A lot of people told us that we couldn't, but we did it anyway. And when I say that we revolutionized the industry, from a little container classroom in Singapore, we actually did invent a lot of different features that is now very common in the marketplace. Things like canned messages, things like, message routing. And things like, having a web-based system for chat, right? And bulk of our customers are actually from the US and Europe. So it can be done. It's not, it's not just possible for you to be based out of the US. You can do it out of Asia, preferably Singapore. And then for a fund overview, we're a small cap VC fund. We look at economic growth indicators that will be able to provide better output. We look at leapfrog technological adaptations, so things like LLMs, but not just LLMs, but how you utilize it, how you adapt to it. And we look at, and we think that Singapore is one of the best places to invest now. So our approach is still very grounded. We look at founders that have drive, that have integrity, that have the ability to scale, and then who are able to build strong, robust business models. And we go in early with them because we actually want to grow with them. This is not just because we think that there's a lot of money to make. There is, but there's a lot of value to be taken at the seed stage, because if you do analysis across all the fund factors, yes, it's easy to come up with a PowerPoint deck, but to really understand how a company can grow takes experience, takes insights that only can be done if you're actually in the business itself. Okay, so just a short intro. So you guys all know about me. My co-partner, he used to be from Founders Fund, and Founders Fund is actually a very different fund. It's a fund backed by Mr. Peter Thiel himself, and he actually also invested in a lot of Silicon Valley companies. So the network, we have network also from Silicon Valley as well as APAC. And then, so sitting deals, we have a pretty wide network, as you can tell from today. This is just, by the way, a sliver of the network that I have today. And in terms of like the acceleration programs, we also do accelerate our startups by not just seeing them coming out with plans, but actually bringing them to customers, bringing them to investors, and bringing them to partners to grow. And again, I know I'm being repetitive, but we look at product-led founders, we look at obvious UEs, and we look at technologies that is recently possible. We don't look, of course, too early, right? But we also don't look too late. There's always this little medium where you can actually go in, where you can actually reap the most value out of it. And and then for competitive advantages, again, I want to say a lot of VCs like to say that they are founder friendly. We like to think they were the friendliest, in a sense. We do. I end up making a lot of friends with a lot of people I don't even invest in, but and we still do help them as well. And then I want to mean by support for those that we backed, right? Charmaine can attest to this. Right? I hired a couple of interns, even for her. So we do like actual hardcore marketing for you. We do, name me an investor that does your SEO and SEM, right? And we do branding, we do lead gen for all my startups. We do enterprise sales. We do even do like if you have to change your business model, we're there with you. And then track record, Jeff has invested in companies like Circles Life, Beam, PayMongo, Iperius, AppBoxo. I myself have done Fast. Fast is probably now one of the biggest point of sale fintech companies in Indonesia. I've also done Wiz. Wiz is probably the leading AI company out of Singapore. We just raised a very successful Series B. And then in terms of exits, we have Payware, which I'm very proud of, because we brought them from unprofitability to profitability, and then they got eventually sold to PLDT. And the current portfolio pipeline, of course, we have Wiz. That's basically my own investment. We have Ultrafy, Joyform, Acme, and then we also have AI Ball. AI Ball itself is a agentic audit platform, and which brings me to the next part of our strategy. So beyond just like investing in companies, one of the insights that we have got is that equity is king. In the future, a lot of people say, oh, AI is going to take away all our jobs. But, end of the day, the real value actually lies within the equity holders, within the shareholders. So this is the period for us to, while we are doing AIifications, right, what we should be doing is should be capturing the value that sits at equity. The three mega trends that would be driving this would be massive production gains. I say production, it's not productivity gains, production gains, because one individual with the help of agentic platforms can now do 3 to 4 times the workload of any individual. So it's not about efficiency. We do think that open source will come to a point whereby it rivals the closed source models. So it's going to be dominating mostly because someone has shared, I think, at a conference today that Silicon Valley now is run on Quen, right? And Quen, itself is an open source model. And as I said earlier, equity is king. So how do we get access to equity? Right. So one of the first industries that are looking to disrupt will be accounting. We're working with AI partners to actually work through the different workflows, manual workflows that the accounting systems would do. So yeah, you can ask the question, what about QuickBooks? Why do you not use QuickBooks? Right? What if QuickBooks has its own AI system? So you say, sure, it's great. But what we want to do is an in-house customized solution to keep the workflows within the accounting companies themselves. We want to keep the bosses, we want to keep the employees, because we just want to make them better, right, using AI. So with that, we can actually also bring in more customers for them through, let's say, AI in the lead generation side. We can also do actionable insights that will usually takes them even like half an hour to an hour to do. Now it'll be flashed almost instantly for the user themselves. And then you can also do your filings. So the roll-up entity would have a lot, we're currently talking to a few accounting firms to actually do the roll-up. What we want to do is actually roll them up together, have an equity sharing process with almost like a retirement plan for the bosses, right? And we'll look through their entire workflows, run it with AI, and then as well as a startup team that can actually do customer acquisition. Progress so far, yes. We're working 2 firms at the moment with 2 technology partners, one of which we've invested in. And once we have productivity trials, we'll share our report with the world. So yeah, this is our fund structure. So, actually, you don't have to take this photo. And then the last one is we're also organizing a Hangzhou AI trip. So I've been going to China quite a fair bit in the last couple of years. So we made quite a fair bit of friends. We do have, trying to plan out a Hangzhou trip to meet not just the Hangzhou 6 Dragons, but also some of the maybe unmentioned. Because the good thing about the Chinese engineering AI talent is that they are very good at engineering, but not very good at marketing. So there's actually a lot of hidden gems. I mean, I'm sorry for abusing the word, hidden gems in Hangzhou. And we'd love to actually share with those who want to come with on the AI study trip with us. So look for me if you guys are interested, or Shamin, who's the MC. So yeah. That's my short pitch.